Welcome back to my YouTube channel. On this week's video, I wanted to go over an ADU strategy proposal, which is a service that I offer, and how this service came about. I'm not sure if there's other agents who offer this service or even ADU experts, because it's a very unique strategy in that most people, when they get a proposal for an ADU, it's an actual proposal of what's going to cost to build. But what a lot of contractors and architects don't offer is what is the risk, right? What is the ROI? What is that return on investment in order for them to in order for you to decide what is going to be the best decision for me? Do I want to max out and build a 1,200 or two 800 square foot ADUs? Or do I want, and I'm talking for multifamily. It could be for single family in some cases, but I'm really referring to multifamily. Or it could be two smaller 500 square foot ADUs, right? It just depends. And so, what's going to help you come up with the best decision is one, who you're going to cater to. Like, why are you looking to build it? If it's for rental purposes, if it's for cash flow, what sort of investor are you? Are you really looking for that long term appreciation, or do you really care for that short term cash flow? Um, and then that may help me help you determine what that strategy is. And so what I'm going to go over today is an ADU strategy proposal, which I worked on over the weekend for a client who was referred to me by one of my other friends, and he listened in on the podcast that I did with Brandon Turner for his podcast series called Cash Flow Fridays, where I talked about the whole ADU strategy. And so he's very well versed in the strategy. He understands the ADU play. He has multifamily that he owns in Long Beach, but he just wanted guidance on which would be the best bet. And so I'm going to walk you through my thought process, kind of what I advised him to do and what to look at. And then we'll see. I'll keep you guys updated with the journey and kind of let you guys know what he decided to do. So I'll start off by sharing my screen here. Hope you guys don't mind. I've been on this jazz vibe for the past couple months. So, all right. So I'm not going to scroll up to the first page because I don't want you guys to actually see all of the details of my client, but we'll start off with a quick overview of where the property is at. So the property, this is a duplex that's located in Belmont Shore. The duplex itself is about 3,000 square feet, and there's two garages in the back. So if you picture duplex in the front, there's some clear space in the middle, and then there's a garage space. I may be able to pull that up on the map, but I'll kind of do that as I go through after I go over the overview. So the lot size is 6,500 square feet. As you guys know, that's actually a pretty good lot to building to lot ratio. He wants to know exactly what I just talked about earlier. He wasn't sure if he should go for two smaller units on those detached garages, or and I wish I had the visual for you guys and have multiple screens up, but the property is in a great location. There is alley access. It's almost like a corner lot. It's next to this commercial space, so great location. For those of you who know Belmont Shore, you guys know it's a very desirable neighborhood to be in. There's transit everywhere. So the scenario that I played out for him is scenario number one would be having two 500 square foot ADUs, because the garages in the back are about, it looks like it's 3 to 4 car garage. So definitely can build two 500 square foot garages, especially now with SB 1211 being one of them, right? What used to be two detached can now be up to eight if there's an existing 8 unit structure. In this case, there's two already existing, which means by right, we should be able to build two. Now, do we want to build two smaller ones or two bigger ones? Here's a scenario for the two smaller ones, which would be 500 square foot each. Each unit would be 1 bedroom, 1 bathroom unit. For long-term rent, based on what rent range shared with me, based on the rentals that we currently have, and just kind of based on what I saw on the MLS and all these other websites like apartments.com, it looks like a lot of the smaller units long term are renting for 2,000 to 2,200 units per unit, which would be about 4,000 to 4,400 in total for both units. If we go midterm, we're always hoping that we can double that, but of course, we also have to take into consideration utilities, furnishing costs, build out costs, whatever that's going to look like, and factor that in. That's going to vary, but I would say for a one bedroom under 500 square feet, probably anywhere between 5 to 7,000 to furnish it, and then utilities should be very minimal, but I would budget around $200 to $300 for both units, roughly. The impact fees are very minimal when you're building under 500 square feet, especially really under 750, but especially under 500 square feet because you avoid school fees, impact fees, and these sometimes, especially in places like Long Beach, they can add up. Luckily, another thing that I really like is that Long Beach is a very ADU friendly city to work with, so they have a very streamlined process with the city. The estimated cost to build these, if I'm just going based off of a price per square foot model, which none of us who are in the design, construction space, development space like to use, especially for ADUs because so many variables come into the picture. But assuming we go with a 250 to 300 square price per square foot sales price in the neighborhood, we're looking at about 250,000 to 300,000 to build both ADUs. The property itself right now, as the duplex with no ADUs, is valued at about 2.2 to 2.4. The average sales price is about 750 in that specific area, and that's average. So my proposed value, right, after the build out, after building two ADUs, would be that the property would go from 2.2, 2.4 to 2.7, 2.8. And that's just going based off of the average sales price in the neighborhood is $750 price per square foot. So you multiply that by 1,000 square feet because we're adding two 500 square foot ADUs, and that gives me 75. So that's wrong. Let's do this again. 1,000 square feet times 750 is 750,000, right? So if the average sales is 750 and it's going to cost me 250 to 300 to build it, I mean, that's simple math right there. 750 minus 250 to 300, that's about $400 in instant appreciation or equity. That's if you get 100% evaluation after the build out. The issue is many times these appraisers aren't taking that into consideration. And so they're not this doesn't happen all the time. We're starting to get a little bit better with it. It's important to work with an appraiser who understands the strategy so they can take the income approach. But even if they were to give you half of the evaluation, right, you're still probably breaking even. And I doubt it for that area that they wouldn't give it the value that it deserves. So when appraisers are evaluating the ADU, it's somewhere between 30% on the low end to 100% on the high end. And when I'm referring to the percentages, I'm talking about the actual value of the price per square foot in that area. So average price per square foot in that area is $750. That's what each price per square foot is selling in that neighborhood. And if it's going to cost you $250 to build it, it's simple math that makes sense. So what are the pros? Lower impact fees, as I mentioned earlier, for smaller units. You can appeal to long-term renters or traveling nurses. So it's great, it's pretty flexible for midterms or long terms, especially because of the location and where it sits. I took a look at Furnish Finder, Airbnb, and Rent Range to kind of come up with my analysis, which I also offered to this proposal. What are some of the cons? Limited rental income compared to larger units. Depending on the market, I really wouldn't worry about it in this type of market, but you just want to kind of tell them what the cons are. Smaller units may not be attractive to families or larger groups. I did tell him that in that specific area, I don't see it being an issue, But if they'd be more like in suburban areas like Lakewood, Cal Heights. If you're in Long Beach, certain pockets of LA are very suburban, and I think in those you may cater anything near an elementary school, middle school, right, high school, or hospitals. You may be catering to families or larger groups or multiple nurses, and that may be something that benefits that specific area. But I still wanted to kind of tell them what all the cons are because I'm very pro this strategy, but I also was like, let me be neutral here and let me play out the second scenario. So the second scenario would be two large ADUs. I put 800 square feet, but really would want to keep them under 750 square feet, to be exact, 749, just because, again, those impact fees and the cost. And you would also kind of eliminate a lot of the clear space that he currently has. And so maximizing it to its full potential is obviously great returns, but you got to think about the tenant too. And I think if you're having two units in the back plus the two in the front already, which are operating as an Airbnb, you want to have some sort of shared recreational space or divided space, but you can't do that if you max out and avoid the clear space that's there. So I'm not really a big fan of this one, but he did want to kind of look at what the scenarios would be. So I still wanted to lay that out to him. So if we were to go with two 800 square foot ADUs, then we'd be looking at a 2-bedroom, 2-bath. That's a very decent 2-bedroom, 2-bath. If you were to do a 3-bedroom, 2-bath, it'd be too tight of a space, but it may be doable. Maybe he could do that to one unit and then the other not. For long term, you're looking at 3,000 to 3,500 in that area, which would be about 6,000 to 7,000 total. If we're doing midterm, 6,000 to 7,000, 12 to 14 long term or midterm for both units. Some of the impact fees are higher if it exceeds 750 square feet. Estimated cost to build based on that, average square price per square foot, 400 to 480 to build both, which is not bad. And that's being conservative, but that's pretty normal for the prices now. And I could see them going up too. Property value that I'm guessing or guesstimating based on recent sales, again, based on that sales price per square foot in the neighborhood, 2.8 to 3 million. So discuss the pros and the cons. And what I really want to get to here, I gave him a third scenario, which would be building above the garage, but that's a whole different strategy. I told him for that, we'd have to go on site, do an actual feasibility, do a feasibility no matter what, right? No matter what scenario he wants to do next. But that one, yeah, we'd have to see the condition of the garage. Would the city require any other, inspections, fees, because we want to build up top? It also kind of eats away some of the square footage when you're building up top because you lose some of that square footage. So not a big fan of that one, but again, I'm here to kind of lay out different options for my clients so that they can make the best decision for them ultimately. If it was me, I'd go with the first one, but here's kind of what I laid out. So based on smaller units, scenario number one, his estimated ROI, right? You calculate the annual income. What is that estimated ROI? Is 16 to 18% long term, 32 to 35% midterm. For the larger units, here's what's interesting is the cost to build is obviously almost twice as much. The income is also almost twice as much. However, the estimated ROI is 15 to 17%. So very similar to this one. It's just a matter of, again, who he wants to cater to and if he really wants to max out. If he, in this case, he doesn't have to worry about financing, but many times that's where you kind of want to look at what does my financing say, and then I will build based on that. You reverse engineer how much finance or equity you have, and then you're going to build based on whichever play better fits based on who you want to cater to. Do you want to do midterm? Maybe go smaller. If you want to do long term, maybe go bigger. If you want to cater to families, maybe go bigger. If you want to cater to travel nurses, digital nomads, just it really just depends. And that's the thing with wanting to come up with the best decision for you. Every case scenario is different based on your wants and needs. So just kind of looking at all these into consideration, and hopefully this helps you in your journey if you're having thoughts of possibly building and you're running across these same scenarios. Please feel free to reach out to me. I can give you a free equity strategy proposal, and we can kind of go over, all of these different case scenarios based on your specific scenario. So I hope that this kind of made a lot of sense to you guys and that it was super helpful. These prices obviously do vary, but they're pretty spot on with Southern California prices. That is it for now. I hope you enjoyed this video. Make sure you like and subscribe and share it with someone who you think might be interested. And if you are, please make sure you reach out.